frustration of multinational firms exiting Nigeria as a result of power crisis, coupled with the macroeconomic reality in the country. From the stock market, we would bring you highlights from the Nigerian stock exchange market with emphasis on the equities and currency markets. This and more on Business Focus. Hello and thank you for joining us. I am Maria Adu-Zakari. Now let's begin with the stock market. The top gainers will begin with the stock market now, and the top gainer, the highest trades for today, we have First Bank Nigeria at 69 trades at the volume of 2,848 at the value of 65,535. MTN Nigeria at 66 trades at the volume of 69,487 and the value of 16,674. UBA has 63 trades at the volume of 1,675 at the value of 38,221. We'll look at the top gainers for today. We have Multiverse topping the list at positive 9.95%. Infinity following closely at positive 9.94%, and PZ closely at positive 9.87%. The bottom losers for today, let's take a look at the bottom losers. We have First Bank Nigeria Holdings with negative 10% and MRS with negative 9.96%. Learn Africa with negative 9.82%. At the currency market, the Naira reached a new historical low on Friday, December the 8th, to close at 1,099 Naira to a dollar at the official market. And at the unofficial market, it closed at 1,180 Naira unofficially. So we're here with Mr. Olatunde to help us analyze, a financial analyst. We're here via telephone with him to help us make sense of the numbers. Good morning, Mr. Olatunde.
Yeah, good morning, Maria.
Thanks for joining us. How is Lagos this morning?
Yeah, fine.
Okay, welcome to the show.
Thank you so much, Maria. Thanks for having me.
Okay, so what does the depreciation mean to the economy? What's the significance of the depreciation in Naira for the economy?
Yeah, in as much as we are still having issue around liquidity in the system, we will still be experiencing the pressure from the demand side of the market. So the currency market is still suffering that level of depreciation, and it's still because of the scarcity of dollar. Though CBN have been able to highlight different programs, different plans to ensure that you get inflow into the system in order to cushion this pressure we keep seeing in our currency market. We believe that very soon in the near term it will be addressed.
Okay, so talk us through the impact of this trend on the economy.
Okay, so generally, we still be experiencing a level of inflation in the market because there are still going to be a lot of pressure when it comes to demand. When people import, when exporters are doing their business, they factor in the extra costs that to them to be able to source for dollars. So these are all the things that we put into consideration. And you can remember some months ago, CBN came out stating that they are willing to finance some items when it comes to import. I mean, items to enjoy CBN FX.
Okay.
Unfortunately, we still have a whole lot of items that are yet to on that list. So what do you expect on the cost when it comes to importing items like this? So definitely inflation arising from cost push would be there, and the consumers will be the one to pay the price and suffer for the pressure and cost attraction that we're seeing in that area.
So, Mr. Oluwatui, what do you think of the stock market, how it fared as of last week?
So stock market did very well between Monday to Thursday, like the first 4 trading days of the week. We saw a bullish movement in the market. We saw a lot of bargain hunting. We saw rush around some banking stocks. We saw for First Bank. We saw for Access Bank. We really were able to record good gains. But on Friday, investors would always be invested. So people won't value. Investors want to have access to a form of returns on the risk they've taken. So considering the bullish trend that we saw in the first 4 trading days, so we noticed a lot of profit takers performing their activities, which is not unexpected. So, um, profit taking from stocks like FBNH that grew more than 20% last week, had to be moderated back below that. So we saw profit taking for that. But generally, the market did very well for last week, and the top gainers still reflect what we've been seeing since Monday: the Multiverse, the Infinity, the ETI, the Thomas Wright, and even UPDC. So the general market performance for last week remained positive. I think the 0.2% gain that we saw for last week also cemented that same position for the month, for the week. And for the month, it's still at, for the year, that is still at positive. The year has grown about 39.6% year to date. And even the losers that we saw, other losers that we saw, is still because of the profit taking. We saw for bank that has grown up to around 54% this year. So profit takers are to at least come into play to start some profit. Even Owando that has grown more than 160% already this year. We also noticed the level of profit takers trying to sell off or reduce their position in the market. So generally, like I said, ASI is strong, the market is strong, and even recently Moody's, the global rating agency, has further rated our creditworthiness as a nation into a more positive platform. So these are things that would encourage foreign portfolio investors to want to do business and come to our market.
Okay, so Mr. Oluwatui, what is your projection of the week? Is it bearish or bullish? What do you think of the coming week?
We still expect a bullish run, and like I've been saying, positive position, and we still believe this will come largely from the banking side. Even though there are no significant catalysts that we can really point to that will trigger the bullish trend, but considering level of consumer behavior pattern that we've been seeing, we believe that this December will not be an exception, and the market will remain bullish.
Thank you very much for that update, Mr. Oluwatui. Do have a good day. Thank you. So that was Mr. Oluwatui Olatunde on telephone analyzing the stock market with us. You're still on Politics and Business TV. Stay tuned. In Politics and Business TV, and this is Business Focus. Despite presenting international businesses with the largest market on the continent, still Nigeria suffers from worrying economic slowdown decisions. Some economic analysts have blamed this on the rising cost of doing business, epileptic power supply, weak infrastructural backing, among others. Now, at least 5 multinational firms have winded down business operations in the country in the last 10 months. This is according to analysis of separate notices filed in by the firms. We're here to discuss this with Mr. Wole Joshua. After this break, stay tuned. Welcome back to the interview segment. Like I stated earlier, we are going to talk about the impact of multinationals exiting the country. And to talk about this, we're here with our financial analyst, Mr. Wole Joshua, who happens to be a partner at WG Professionals. Good morning and welcome, Mr. Joshua.
Nice having me today.
Okay, so we are going to talk about the impact of multinationals leaving the country. Would you say that's a big slap on the giant of Africa's face?
Definitely, this is not good on in respect of Nigerian economy, and it's not a good one for multinationals to be leaving the country, because multinationals, we know how heavy the kind of investment they bring into Nigeria. Apart from that, we know the impact of their operations in Nigeria in terms of technical know-how, in terms of employment, in terms of their presence. Their presence gives a perspective to more other multinationals to come into Nigeria with their foreign direct investment. So for them pulling out of Nigeria is not a good one and should be discouraged. Should be discouraged in the sense that we should find a way of discussing with these multinationals on how to mitigate whatever difficulties they are exposed to in the nation currently. Whatever situation the present economic condition is bringing to them, we should try to mitigate it. So if we are so less careful about the rate at which our citizens are leaving the country, we shouldn't be so less careful about the rate at which the companies are leaving the country. It will be detrimental for the nations. And like it or not, we can't cry over spilled milk. We can't cry over the era of the PDP. We can't cry over the era of the APC. We have to face, we have to face the current situation, because whoever wins the presidency then should know that he has signed for this and he has bargained for this. Whatever situation he meets on ground is what he is meant to manage, and in managing this, he has to manage the business, ease of doing business, the business environment, and at large the economy itself. Because whether we like it or not, the multinationals, they play within the national environment, national economic environment, which includes the purchasing power of we Nigerians that they sell to. If you are selling to me, if I cannot buy, what's the essence of producing? If you cannot produce, you cannot make profit. If you cannot make profit, it's better you carry your load and go back to your hosts, to your native land, which they are currently doing. So what do we do to work on the purchasing power? What do we do to work on many other things? I could remember that in January, when subsidy was about to be removed, I could remember that General Abdulsalam Abubakar reiterated this fact that it will eat deep into the purchasing power of the citizen, and this will in turn lead to this kind of situation. Now we are faced with inevitable choice of taking some harsh economic decision. So we need to mitigate it and quickly double up our efforts in making sure that the impacts are being less painful on the citizens and on the companies, so that the business environment will not feel the impact. We are talking about multinationals pulling off their bags. We are not talking about SMEs dying off their falling off their business track. We are not talking about many other Nigerian companies finding it difficult to do business. We are only talking about those picking up their bag and returning back to base. If they are returning back to base, we have Nigerians who are returning back to, who are closing up their shops and returning back to the labor market or returning back to the Nigerian economic market. So we should look at it holistically. Businesses must thrive and businesses must pull their weights of costs and expenses and must make returns in Nigerian environment.
Okay, so what do you think are the challenges they're facing? Because definitely every firm would have a different reason why they're living off. What do you think would be the average reasons why they're facing challenges and have to leave eventually?
We have a lot of reasons why companies are folding up. And this reason has to do with ease of doing business. That's summarized in ease of doing business. Whether it's the double taxation, harsh tax environment, whether it's the repatriation of currency, whether it's insecurity, whether it's the corruption perspective index of the nation, or whether it's many other things which we may be faced. Many other things that has to do with production, even where we have our strength, which is the agriculture. We are finding it difficult to harvest. Even when we are not finding it difficult to harvest, it's becoming costlier to produce agricultural produce due to insecurity and many other things. We are finding it difficult to extract our resources, and we are finding it difficult to source for raw materials. If these raw materials are costly, it will erode into the revenue of the company, erode into the profits, and suggest to the company that you have to leave or close down. So if these are on ground, companies cannot thrive. So we have to look into our ease of doing business, call a roundtable discussion between these multinationals, and make sure that we listen to their complaints, we listen to what challenges they are facing per day, what challenges they are facing annually that led to most of them closing shop. If 5 has closed shop within the last 10 months, I believe that 5 are being distressed in the last 2 months. If 5 are being distressed in the last 2 months, 5 others are on the process of being distressed in the next 2 months. What are we doing to mitigate this effect? We know that the effect of subsidy removal, of foreign currency flotation, and many other policies of this current government are taking toll on the citizen, and the citizens are getting back to the business environment. There is a symbiotic relationship between macro and micro economy, which has to do with citizens' economy and the company's economy. If these are on ground, they have a way of taking toll on each other. If I cannot purchase, you cannot sell. If I cannot sell, you cannot make profit. So you are on the edge of either closing shop or pulling your resources off and traveling back to your country.
Okay. So on the fact that you mentioned the firms are leaving, is it that we are not? Sorry, you mentioned the president should find a way to work around that. What do you think would be the best way to go about that? Because he actually said that they would talk about all the bottlenecks and make the federal direct investments comfortable to work. You mentioned ease of doing business. How would the government go about doing that?
The government can do that by first listening to the challenges of businesses. What are we facing as business? Are we facing a tough tax environment? Are we facing a tough custom policy environment? Are we facing dwindling revenue due to purchasing power? What are the challenges faced by these multinationals? So there should be a roundtable which will consist of independent assessor, which has to look at the reports, blueprints of whatever the product of the roundtable discussion is. Calling a representative of the tiers of government in making sure that they achieve the best, because federal government alone cannot achieve this. we have the host environment who provides the land, and when they provide land, everything that has to do with persons and land has to do with state government. How do they achieve ease of doing business within the state? It shouldn't be left to the federal government alone. Then when we talk about double taxation and double charges, we should listen to the pulse of these companies to know what their challenges are in making sure they break even. And what should the government do? We have a lot of things which may be suggested within this roundtable discussion. So I will advise that the Mr. President should, as well as is looking at pulling foreign direct investment into Nigeria, should look inwards to look at giving us a sustainable business environment to allow Nigerians to invest in Nigeria and allow businesses in Nigeria to thrive, giving them a kind of reassurance and sincerity of policy. Sincerity of policy means that government should open up most of this classified information and make sure that we have first-hand information about what is going on. Currently, it's difficult to withdraw your currency in Nigerian commercial banks. What is going on? Is it to curb the volume of naira within the economy? Is it to check? Is it to check what are we being faced? The government's quietness is giving a kind of room for large speculation. Sure. And if you allow speculation to thrive and you don't allow understanding government policy, it becomes difficult for people, for industries to believe in your policy. It becomes difficult for them to believe in your pathway. Talk less of staying within your track, within your leadership track. If they can't stay within your leadership track, it's either they pull their bag and travel and divest, or they pull their bag and sit down at home, join the labor market, and join the chase for the few jobs we have. So that becomes a little difficult if we are to assess the government policy. We have a lot of favorable policies that are here on ground. We have the Petroleum Industry Act. We have the Energy Reform Act. We have the subsidy remover, the impact of the subsidy remover. We have Dangote refinery coming up. We have a lot of things, a lot of policies that suggest that Nigeria will increase its GDP or will improve in its economic stride. But we need to make these industries, we need to make these companies believe in government policy, to chart a course for government policy, and to make sure that Nigeria is a safe haven for them to invest.
Okay, so a lot of tabloids out there have the headlines of about 5 firms are leaving Nigeria. About 5 firms are leaving Nigeria, but none of them, or a lot of them, are not actually showing that Nigerians are losing their job. About 20,000 jobs have been lost due to this 5 firms leaving the country. What would you say is the effect on the economy?
Well, about 20,000 jobs lost means that 20,000 breadwinners are sent back to the labor market. Sure. Means that 20,000 Nigerians are not able to pay their taxes to the government again. So if we look at the figure, it's scary. However, I believe that companies pulling off Nigerian economy are not pulling off, selling everything off, or packing up their equipment back to their base country, but reselling it to...
Because every firm would have a way to deal with this.
Yes, they are selling off, not really. They can't... I believe that they can't pack all their equipment at once and leave the country.
Some are just importing. They decide they're not doing anything here, so they just bring into the country.
So they keep their factories. They keep their factories inactive.
Yes. They sell the assets and then they move back home and then they just
They
deliver.
they're just dealing with trades. Yes, that's easy to say, but I believe that most of these sales, most of these sold companies were being taken over by another management, which probably one way or the other will recruit the staff yes, will retain their staff and will continue in production. Whether they retain or not, we have 20,000 staffs losing their job, and this is not good enough for the Nigerian economy. And with the spate of people leaving Nigeria, emigrating out of Nigeria, it suggests that losing our skilled manpower to other countries and losing the skilled manpower that are engaged in this country to unemployment is a little scary. I believe that the figure may be constant, but the effect is still there. The effect is still there in the sense that many of our youths have traveled, many of our skilled have traveled, and many of the skills having their jobs are not well engaged any longer. 20,000 are not well engaged any longer. So the impact is on the economy, and if the economy is badly impacted, we know that it will take toll on many other companies who may decide to pick their bags and leave. So that's not a good one on the economy. And we should look at the impact of the African Continental Trade Agreement, which suggests that African is seen as a big market rather than a big production yard. So if this is to be considered, I think the government needs to manage the impact and effects of this on Africa. You can't be bringing your products from developed countries and expect that you have a market called Africa. A market called Africa doesn't exist. We all have our products. Let's refine. Let's finish it before we take it out of the country, out of the continent. We can't take it to Asia and Europe and bring it back for sales in Africa. Or we cannot have the products in Africa and allow Asians and Europeans to bring to extract their own products, farm their own products, or produce their own products and come and sell it. Come and sell what we have to us in Africa. It will improvise Africa the more. So we should look at how we can meet the competition at the board and making sure that Nigeria is productive, competitive in making sure that it provides for its citizens. So it may be difficult to manage, but we should look at our competition with the whole world, not within the industries in Nigeria alone. So we should look at African Free Trade Zone and many other free trade zones. Situations where companies pull up their bags, leave for neighboring countries, and they believe that they can ship their products back into Nigeria may not be tenable. We shouldn't be seen as a big market. We should be seen as a big opportunities.
Okay, Mr. Joshua is just explaining to us the effects of multinationals leaving the country. We'll take a short break. We'll be right back. Do go nowhere. Okay.
Thank you.
Welcome back. We are here talking about the effect of multinational firms leaving the country, what it does on the economy. So, Mr. Joshua, some of the challenges the firms are facing which is making them decide to leave the country include power supply. The Manufacturer Association of Nigeria has stated that they have used a total of 144.5 billion naira for electricity. That and security and a lot of other infrastructural problems are making them as some of the reasons why they are leaving. What do you think the government should do about that?
Well, what government should do in respect of the power situation in Nigeria is as simple as making sure that private investors participate in power generation in power value chain in Nigeria. When I mean value chain, I mean generation, distribution, and transmission and distribution of electricity in Nigeria. And that, I believe that the Electricity Act has done, which gives states and individuals a kind of leverage in generating their own electricity and distributing it and transmitting it and distributing it to consumers, in as much as it's not more than 1 megawatt, and in as much as it is not affecting the agreements of the discourse, and in as much as the host communities are benefiting from that. I believe that will pick up. We have a lot of investment in power sectors that are promising. The investment in respect of data generation, in respect of Siemens contract with Nigeria, the German contract with Nigeria, and we have the other one which is annual infrastructure development of electricity in Nigeria. So we have that in place. But that as it may, whatever we will to the consumer is what they see as obtainable. The fact is that we spend a lot on diesel powered generator in Nigeria, and these diesel powered generators are not effective, because if I have diesel powered generator, you have diesel powered generator, there is a chance of you underutilizing your own generating set, I underutilizing my own generating set. So who pays for the excess power supply? So why not make our national grid work, allow the public-private partnership to work, and then let's see the liberated electricity industry supplying what we need. Government should look into the ease of doing business portfolio in Nigeria. Ease of doing business portfolio has to do with the power, has to do with the tax, has to do double taxation, has to do with the environment, has to do with the insecurity. If we have all these portfolios on grant, all these items in the portfolio called ease of doing business, I believe that government should work on this, pull its weight, and be able to give a conducive environment for economy in Nigeria. We have this we have this regime being dedicated to reviving the economy of Nigeria. The last regime dedicated its energy into nipping insecurity in the bud, and all credits to whatever they've achieved. And this current regime has taken off the weights of the insecurity we have, taking off the weights of the power generating issues that we have, and adding the economic issues to it. The economic indices like inflation rate, like the exchange rate has been well added to it. During the 1999 era, we know that dollar was well below 100 naira, and as of today, dollar is well above 101,000 naira, 1,200 naira, and this has been a difficult one to do. Repatriation of end income in Nigeria, that is return on investments, return on investors fund, has been difficult to make in Nigeria. Investors have not been able to repatriate their funds, and this has been challenging. This is the ease of doing business portfolio that the regime of President Bola Ahmed Tinubu should be willing able and well energized to carry. So I wish them well in doing so.
Okay, so Mr. Joshua, how conducive would you say Nigerian business environment is? Because we have Shell. It has been in Nigeria since 1956. We have some firms that have been here till like 51 years and then decided to leave, and we have some that just stayed for a year and left. So how conducive would you say the country is for businesses?
The economic environment of the country is not smiling in respect of doing business. We're just being opportune to see 5 multinationals leaving Nigeria. We have many other national companies finding it difficult to do businesses in Nigeria. We're having many small and medium scale industries finding it difficult to do businesses in Nigeria. So we have a lot of issues militating against their ease of doing businesses in Nigeria, militating against their convenience of doing businesses in Nigeria. So we need to look into the economic climate of the country. We need to look into the economic environment of the country. We need to look at our position globally in doing business. We need to look at what we have advantages in doing, and what we have what we have challenges in solving. I know we don't have challenges in bringing agricultural products to table. I know we don't have challenges in oil production, except for the imports and import and dwindling and insecurity on the part of the extraction and transportation of crude oil between where it is being extracted and the shipment points, and if it were to be the product, where it's being shipped from and where the product is being taken off. That's vandalization. We have the challenges of vandalization, and we have the insecurity. Our achievements within the agricultural sector, investment in rice production, investment in cassava production, investment in cocoa production, investment in many other cash and food crop production has been, yes, I've been hampered by insecurity. Imagine paying government taxes, paying levies, which are imposed by bandits, and still trying to stay aloof, stay on businesses. It will be challenging. As of this stage, we should be looking at having a kind of task force, presidential task force, who are mandated to respond to challenges of insecurities as they are. When we are talking about insecurities, we definitely have kidnapping, we have banditry, we have vandalization, we have many agitations within Nigeria. So what happens to kitting them up, making sure that they are well kitted up, even over kitted up, so that they will face the challenge. I could remember that something happened in Niger State. A citizen of one country was kidnapped. Before we know it, before we even hear the news, they were there to rescue their citizens. What happens to the Nigerian security environment? That it's not a rocket science.
So it's not the Nigerian officials that made the move to rescue him.
No, it's their own home state security that came to rescue the kidnapped citizen. So what happens to our own country? What happened to our own country's security? The regime of President Goodluck Jonathan used some kind of machinery to achieve its own results. That means there is a gap between technology, then the security information, and many other things, and the will. So how do we tackle this? So that should be on the table. The willingness to tackle insecurity, willingness to tackle tackle double taxation, which I believe that the tax reform committee is working on, the willingness to tackle the infrastructural deficit, that generated that led to much usage of much reliance on diesel powered alternative electricity source, and many other things should be dealt with. And when we deal with this, I believe that the environment is suitable for multinationals to stay. If a company has stayed 51 years in Nigeria, it's a home to that. Nigeria is a home to that country, to that company, and they are citizens of Nigeria. True. And they can't just live like that. They should be called upon. What's affecting your businesses? What is affecting your value chains? What can we do? What can the government provide in making sure that you stay in Nigeria? I believe that this can be reversed if we have that political will.
You have talked about the way forward. That's my last question for you. We have talked about the effects or the impact of the multinational companies exiting Nigeria. We'll go on a short break. We'll be right back after this. You froze. You froze. Business Tidbit segment. Mr. Wale Joshua, what do you have for us today?
Thanks for having me on Business Tidbits.
Welcome back.
What we have on ground for you today is the taxation element of the business.
Okay.
It's a part of the business that needs to be well attended to, and given the fact that we are approaching the end of the year, we need to manage most of our tax of our tax elements very, very well. The law has provided a band for companies operating within Nigeria to pay their tax. The first one is 0% for companies operating with turnover less than 25 million naira. This you have to justify by providing your documents. Companies operating between 25 and 100 million naira are to pay 20% of their profits as company income tax, and companies operating above 100 million naira are to pay 30% of their profits as company income tax, and 2.5% of this will go as education tax. That's statutory education tax element. Then we have the Nigerian Police Trust Fund, which is 0.05% of your profits. So these are the payables for the end of the year, and you have 6 months to file this. The first 3 months you are going to get a rebate of 1%. The next 6 months you won't get anything. Then after the 6 months, which is June 2024, you start paying interest and penalties on this. So when you are rounding up your business, what you need to consider here, the reason why we're bringing it up is that you have to consider your volume of trade, your trade volume within the year. Which band are you categorized in? Is it the 25 million naira band? Is it below 25 million naira band? Is it the between 25 million and 100 million naira band? Is it above? The implication of this is that if you are below 25 million naira, you are exempted from payment of value-added taxes. That is, if you've not charged on your customers. If you have charged, it's better you remit the portion what you've charged, because what you charge belongs to the government. They call it transactional taxes, and it belongs to the government. So apart from this, look at the services that are within your records, which are subjected to withholding tax. This has to do with auditors, legal practitioners, and services contracts that you've engaged people in. You have to withhold on it. If you don't withhold on it, you may be exposed to a kind of penalties in respect of this. So that's withholding tax element. Then the value-added tax element, I've told you that the essence of bringing this up is for you to check your turnover level. That is your revenue or income level. Is it up to the band, the bandwidth at which you can pay value? You are expected to remit value-added tax on. If you are remitting your value-added tax, if you are remitting your value-added tax, make sure you remit before the end of the year. If you don't do that, you are expected to pay interest and penalty on the elements of VAT not remitted. If you are a little above 25 million naira, you would pay VAT on your turnover. And if you have withheld VAT, if you have collected VAT in respect of your transaction, in respect of your transactions for the year, make sure you remit this VAT before the end of this year. VATs are remittable before the 21st day of the following month. That's when the ones you've collected are remittable. But as small businesses, if you have exceeded the 25 million naira band, you have to pay. You will be charged value-added tax on your transaction. That means you are no longer classified as small businesses. You are classified as medium and big and large businesses. So that's number one. Number two is your personnel costs. Your personnel costs, you are expected to remit your payee before the 10th day of the following month to the state government, state IRS. So if you are remitting State's Internal Revenue Service, if you are remitting this, it depends on the address of the staff. Wherever the staff resides is where you remit the tax, the personal income tax. And when it has to do with the directors and the staff, you have to remit, you have to file your returns before January 30 of the following month. That's January 2024, January 30, 2024. You file the returns for 2023 financial year. So be prepared to do that for the year, so that you will not miss you will not be subjected to interests and penalties. And in doing that, you pay the business premises charge, you pay the development charges for each staff of your business. So that's the returns for the payroll, the returns on your payroll. The taxes paid by Nigerian businesses are company income tax, education tax, then capital gain tax, stamp duty tax, value added tax. These are to be managed. And in respect of your profits, your revenue are to be taxed after netting off the expenses and depreciation, allowable depreciation. Government has a way of calculating its own depreciation, provision for depreciation, and your expenses should be REN, that is wholly for the business, reasonable for the business, exclusive for the business, and just for the business alone. So when you are doing your business, you should make sure that your expenses are divined within your business. It must be necessary to run your business, not that you just jump into expenses and you believe that government will take that expenses from you. Your party, your politically exposed expenses, your party expenses are not relevant in determining your profits for the company. Thanks for having me today. We'll be looking forward to many
I
other things.
sure did learn something. The whole of the tax, there's the value added, there's the withholding. That's the one you pay with the penalties.
The withholding tax has to do with your contracts and professional services. Okay. So you help the professionals pay their taxes before they themselves will pay their taxes, an advance payment of tax.
Okay, that's really interesting. Yeah. Thank you for that, Mr. Wale Joshua.
Thank you for having me today.
Welcome.
Yeah.
That's it for today on Business Focus. We talked about the effect the multinational companies have on the economy as they leave the country today. I am Maria Adozakari. Do have a good day. Stay blessed.
Thank you.